basically we start last week what is the process of raising money for financings to implement these strategies. Now, we discuss growth strategies, and growth is, is costly and it make money to raise, right? And how businesses get financed for expansion. In fact, we discussed the very first day and last week, in fact, the equity investment. Now we issue shares and people to invest the money through the shares. Now, some of the disadvantages of expansion through the equity investment, you dilute in your ownership. The second method we can get finance for expansion is holding that profit which the businesses makes in order to make the more profit. What you call this as an internal sources of finance or finance, then we call retained profit. So you can make use of some of the retained profits for sponsor or finance for your expansion strategy. And the third one we discussed last time, there may be a grants offered by the government for the development of certain business activities. Maybe different government will come and will introduce different schemes for employees or for entrepreneurs to commence businesses, right, to facilitate, to expand their businesses. Then, of course, the fourth method we can say is the bank loans. You can take loan from mortgages, providing property or something. You can obtain loans for expansion. The other one is, of course, issuing of corp debentures. Right, there's another way you can collect money. Corporate debentures are securities issued by a company and for the purpose of getting loan capital, right? And the different type of debentures may be subordinate debentures. Usually the debentures have some specific features. They talk about the maturity and period, maybe 3 to 10 years, but usually today's go for 3 to 5 years. And we define the rate of interest. Now we say we won't say interest, we call the coupon rate. Usually for corporate debentures, your interest is paid, so the coupon is paid semi-annually. That's the normal pattern, right? And so the third one is sometimes debentures issue with the security, we call guaranteed or secured loans. These are some of the specific features of a debenture. So then we may have there may be a certification. Now certain debentures certified by third parties. Right now, say for international trade also, your ILC will confirm by another bank, something like that. So further confirmation, so further certifications given by a third party. So if he is not like a bank guarantee, right? And also we call the subordination. So debentures which have a lower ownership, right? These are the subordinate debentures, so senior debentures we call, which have a lower ownership, right? Some sort of thing. So these are the characteristics of debentures. And then we have another methods we can raise money. We call ICO. It's called initial coin offering. Is something similar to IPO. So ICO is basically an initial coin offering. Is the cryptocurrency industry's equivalent to, and ICO act as a way of raise funds. Now IPO is the initial public offering in the process by which a private company can go public by sale of their stocks and guarantees. Likewise, it is similar. The ICO also same thing. Now ICO is similar to an IPO, as I say. What is IPO? Is your initial public offering. So process with the private company can go public to sell stocks and getting, right? And where the objective is raising funds for a specific case of a particular purpose. Investors from anywhere with a bank account or credit card can take part in an ICO, right? So now according to there are some money developed from here is substantially huge amount. Now, what is the characteristics of ICO? So there won't be no dilutions of equity, so no shares issued. So therefore, no debt because of no interest. Ability to reach investors around the world. It's estimated around in 2018 around US 7 billion, and fast execution compared to IPO, and investor returns as decided by the promoter. So these are the some of the good points about the ICO with compared with IPO, right? So new way of raising money is what you call initial, we call coin offering, right? So like IPO, initial public offering, with initial we call initial coin offering. So this is another method of there are some instances like that from prominent ICOs in 2018. These are some of the example of ICOs offered in the world, but Sri Lanka is not much, like UK, USA, Germany, France, Switzerland. So these are some of the famous prominent ICOs issues, right? Travel block, ADB on and FTB coin deluxe. So these are some of the example for uh, prominent ICOs, right? Okay, this is another method of improving. Then we have the blue ocean approach, another approach, and this theory behind in this is this guy. The now one time he was the most richest person in the world, but again the Amazon guy has taken over in 2021 latter part. But in the early part of this year, and he was the number one world richest person in the world. Now I think again he has gone to number two. Now, what is blue ocean approach mean? Basically, blue ocean approach is he want to make. He is the guy who introduced this Tesla hybrid, or what you call this electric car, owner of the electric company, and he want to develop a gigafactory, right? A gigafactory, Tesla gigafactory, and for that he need money. He want to expand their factories, so called Tesla gigafactory. Now, how he has collect money for construction of this factory. Now, what he has done, he put an advertisement, or he put a email, a notice in the web. He said, if you want to have a Tesla car, which is similar to this, within 2 years' time, now you have to pay me, or you have to invest the money, maybe something $30,000 or something, that is maybe around 50 to 60 price after actual car cost. I said, if you invested now of so much of money, and he work it out number of cars he need to manufacture in order to get, or in order to fund it, this 5,000 Tesla cars, he said 500,000 Tesla cars is going to manufacture this new factory. Now, for that only is to manufacture this gigafactory, he want money. Right, he asked from the customers or the people who interested the car like this within 2 years' time. So this is the cost, but if you invested money now, I will within 2 years, I will guarantee to give you a car. Now this is how he canvas money. In fact, and he work it out the cost and the number of cars to be manufactured within this factory, and he in a position to collect all these required funds he want to build this factory. Now through this factory, as he promised 2 years, and he in a position to sell it, he in a position to give these people who gave that, who made an investment of say 30,000 dollars before 2 years period. So there's no problem. So he has not to pay any interest, no guarantee, nothing, and it is a novel way of collecting funds. So that's what we call the blue ocean approach of collecting funds. So there are different methods. The topic is how he's going to collect money, right? And then there's another method what you call crowdfunding. Is a funding a project or a venture by raising small amounts of money from large number of people, typically via the internet. And so there are some companies crowdfunding, so they generate money from the small and put it to the project. This is another method of collecting funds, right? And then what do you mean by leverage finance? Right, leverage finance. Now is a very famous example question. Now the leverage finance simply means if you want some money, the funding a company or businesses unit with more debt than would be considered normal for that company or industry. Right now, he is going to take more debt. So that means higher than the normal debt implies that the funding may be riskier. So suppose your fund is, the organization is having more fund through debts, is of course it's more riskier. And therefore more costly because of higher the risk, higher the cost. So the normal borrowing, higher credit spreads and fees is often also more complex with conflict. So hence the leverage finance is commonly employed to achieve a specific temporary objective. Now suppose for an example, if you are going to acquire a certain company, right? So by way of getting money or a loan from another person, and that is we call them as leverage finance. Now the leverage finance basically, so you have a more debt than equity, right? That is what you call the leverage finance. If you have more debt, certain fund even more on loan against equity, we call leverage finance. So then leverage buyout process. Now what do you mean by a leverage buyout process? The group takes over control of a company, sometimes with hostile takeover, use high level of leverage and multiple debt layers to take control, right? So that means basically leverage buyout mean you take more loans and go for acquire a certain company. So that is what you call leverage buyout. So actually it is a specialized deal structure, right? Specialized deal structure where a company is acquired through utilization of outside financing from either a bank or another lender. Right now, LBO means leverage buyout, basically meaning say you are using outside finance, outside of sources of fund. It can be taken from a bank or any other lender, and you are going to acquire a certain organization or certain business entity. So this LBO market has continued to expand across many sectors, right? And this is the method we are using for leverage buyout. Now this leverage buyout, play an important role in merging and acquisition through being a mechanism of market equilibrium, right? Now here is like this. Simply say LBO mean, now say you are going to have a wedding. So you are going to have a wedding of borrowing money from people, one lender. So you're going to have a nice, large wedding. So you are trying to enjoy your life through other people's money. So something like that, LBO plays an important role basically for merchant acquisition. That means basically you are borrowing the money and take that organization or entity. So therefore, remember, some people are talk about, there are two things if you want to put down. Some people are talking about the management buyout, and some people are talking about the leverage buyout. So what is the difference between a management buyout and a leverage buyout, right? Okay, so leverage buyout and a management buyout. Now, it is not in your handout. If you want, please put down the small note. What is management buyout? The management buyout is a form of acquisition. It's also a form of acquisition, right? A management buyout is a form of acquisition in which a company's existing managers, that means your employees or company's existing managers, usually called the managers, acquire a large part of all of the company, whether from a parent company, right? So that is what you call management buyout, right? Management buyout. That means the managers buy, which involves an entirely new management team taking outside company. So the so through the internal management only, they are going to take over this. Whereas where is the leverage buyout mean? So you are going for outsource or outside organization, bank or any other lender, and borrow money and take the that company or acquisition stake based on outside borrowing, right? You go to the borrower or lender or a bank, you take the money and take the acquire your organization. It's a acquisitions take place based on bank or third part money. But whereas the managers of the organization going to acquire a large part of or almost all the shares of the company, we call from the parent company, we call the management buyout. Now, I think you may aware what is the difference between management buyout and leverage buyout. Leverage buyout, you are going to take loans, debts, and try to acquire. But whereas the management buyout, your internal manager is going to take over, right? Okay. So what are the difference between equity capital and debt capital, right? What is the difference, similarities and differences between equity capital and debt capital? Right now, equity as a finance and debt or loan as a finance. Now, if you really compare these two, you noted that to go for these are large amounts available in both cases, both debts, loans as finance. Large amount also may be possible. So the control can be lost due to outside investment. The moment you invest, you're diluting, so your control has come down. Whereas debt, if you take a debt or a loan as finance, so there's be no direct loss in control, but however assets may be used as a security for a loan. Right? There won't be a dilution of your share. So the cost, of course, equity is cheap, as you well aware, and debt, of course, we know it's a very high cost, right? Because you have to pay more interest. So therefore, for equity finance, we don't want to have a security, but for debt and loan, usually we have a collateral or security. Of course, the risk is very less. Why? Because when the equity is giving, as well as if the organization enjoy profits. But usually the debt, loans and finance is a high risk, because with company make a loss or not, so as agreed, you need to pay your interest and capital. Right? So these are the 5 factors: amount, control, cost, security, and risk can be considered as characteristics when we look for a equity as finance and debt, loan as finance. Okay, right? I think you understood these differences, right? And also sometimes you may use this to get some money for other methods, cash quickly. So if the organizations need money quickly, so you can go for debt factoring, right? Other methods of raising finance we call debt factoring. So factoring business will offer immediate payment, take over the debt, maybe around 80% of the total value, and the organization is going to and also will charge a fee for these services, and the balance 20% they keep as a margin. Right now, what is happened, say for an example, in Sri Lanka we had, I think, 2, I don't know, now he's having only Sampath factoring company and the LOLC factoring company. What is in, if your grant loans, they give you a credit facility. So you offer a credit facility, and the money going to come after 3 months. Now I want quick money, so then I going to sell my debt to a debt factoring company. They pay me only 80% of the value of the debt, and after the maturity period, they are going to collect the money from the debt, from the supplier, whoever, right, or customer or whoever. So for that, you have a 20% mark. That is their markup, as well as sometimes they may charge a fee for these services. So this is another method you can raise the finance. Then apart from another method, the next method, of course, leasing and hire purchase. Leasing, basically, I think you will learn. So there are 2 type of leasing, where you can finance leasing and operation lease, where you don't want to pay money, so you can use the asset without paying the full cost of the ownership. So once you make the payments and you get the money, right? So the leasing and hire purchase goes under 2 different legislation, and this is how also you can collect some money, or maybe equipments, right? Maybe vehicles, especially. Right. Then we have another method we call escrow companies. An escrow company holds money and documents between parties. As a neutral third party, the escrow company helps facilitate buying and selling assets. And it is a legal concept describing a financial instrument whereby an asset, so escrow money, is held by a third party on behalf of other parties that are in the process of completing the transaction. It's like a trustee, right? Escrow, right? Okay. So these are some of the methods you can use to finance your strategies, right? From very simple method, from equity investment, from using your retained profits and going for the government grants, or maybe a loans, or maybe go for a venture capital things as well. And then you go for if you really look at it, then you go for debentures, right? and also you can go for ICO, and then we can go for blue ocean approach way, and then crowdfunding, then go for leverage financing, and for that I will go for management buyout and leverage buyout, and another methods can go for debt factoring, leasing, and hire purchase. So these are the some of the, or maybe you can invest money in escrow. They will keep it once you're completed. They give the money, right? So these are the some methods you can collect or raising funds for business expansion activities. So in today's context, so the businesses, financial services are provide more services to the clients, right? And so what are the services offered by clients? Storage of an access to funds, protections of assets, means to grow assets, movement of funds. There are some services. In the global trend, we go for consolidations, and also we go for financial supermarket model. And of course, the financial supermarket model, we call them as the phrase is a sort of a conglomerate. Sometimes we call financial supermarket as a financial conglomerate. The first bank introduced this concept, financial conglomerate, is Citibank. Right now, what the financial supermarket model is talking about, basically it's sort of a cross-selling opportunities. Now, rather than one organization and maybe 2 or 3 financial organizations offering a financial product to customers, we call a financial conglomerate, right? It's called the financial conglomerate. Now, the financial conglomerate is basically the financial institution who engage in banking, insurance, and securities business. At least more than 2, right? More than 2. Say, for an example, financial institution engage in banking, then engage in insurance, as well as securities businesses. We call them as financial supermarket or financial conglomerate. Remember, what is financial conglomerate or financial supermarket model? Is a financial institution engage in banking, insurance, and securities of a securities businesses. We call a financial conglomerate. So therefore, financial conglomerate is usually offering more than 2 services to the customers, right? It should be a bank, it should be a insurance, or it should be a security firm. But one organization is need to be offer at least more than 2 or at least 3 services to customer. Only it become a financial conglomerate. So what is the strategic intention behind this financial conglomerate, right? What is one is synergies and cross-selling, right? You know what you mean by a synergy. So if you work together, you have a more opportunities, business opportunities, than when you are working alone. You're more strength, and also you can sell other products to the same customer. That is what you call cross-selling. So what is the main objective of supermarket model or financial conglomerate? To organization to enjoy synergies as well as cross-selling opportunities. So what is financial supermarket or financial conglomerate mean? Financial institution who are engaging banking, insurance, and securities. We call them as a financial conglomerate, right? So that's it comes to an end of the end of the funding methods, end of the series, and we need to look at it another important plan. Now, at the beginning of my series, I told you all there are three type of plans you need to prepare according to the central bank, right? As I explained to you, in the according to the um, according to the uh, according to the according to the central bank direction, we need to prepare three type of plans. So these three type of plans are uh, strategic plan, succession plan, and um, succession and BCP plan. So BCP mean basically what you mean by a BCP is called as the okay, 1 minute. It's called as uh, a business continuity plan. So what is business continuity plan? Now, BCP is a comprehensive written plan. It is a comprehensive written plan of action, right? Plan of action that sets out the procedures and rules and systems that are necessary to continue or restore the operations of an organization in the event of a disaster. Now, suppose something happened to your organization or something happened to your bank due to certain event of a disaster. So when are you going to start the business? So that's the plan written by you. It's a mandatory, it's a regulatory requirement. So that is what you call business continuity plan. Now it's a classic example in these days because of a natural disaster, or so it's an event of a disaster. We can say coronavirus, COVID-19 is a disaster. Now you noted that our business activity is basically whole because you are not supposed to go to the office, you must have a meter distance, and you have a bank need to operate, but customers are not willing to come to the bank. A lot of people are work at home, right? So under such circumstances, how we are going to operate the banking activity? So you must have a BCP. Now, it's a very coronavirus is a very very good thing for check your review your existing BCP, right? So we never expected incidents like this. So how bank without disturbing or without interrupting provide services to the customer? That is your BCP. Now, another example I will tell you. Suppose your branch is located in close to a certain river. Say, suppose you, for an example, I can tell you, okay, your branch is located close to somewhere in Kaduvela. Good example. The low level of Kaduvela, your branch is usually located. Lot of banks usually located. Which the Kaduvela area is usually under flood when we have the more rain. So the Mahamili Kanga is overflow basically from Kaduvela. So the most of the banks are underwater, or maybe your bank you cannot access to your branch. So maybe destroy certain documents and things like you cannot operate now. Okay, now what does BCP mean? So how quickly you can commence business in Kaduvela branch? So that is the business continuity plan. Actually, it is a comprehensive written plan of action that sets out the procedures and system that is necessary to continue or restore the operation of an organization in the event of any disaster. Right now, what is the objective of the BCP in here? What is the objective of BCP? Okay, what is the objective of the BCP? Now, the objective of the BCP is basically, if you really look at, create, document, test, and update a plan. So, how to recover critical business operations. So, minimize loss through the BCP plan. You can minimize your loss. And also remember, it's a legal and regulatory requirement to your organization, right? So that's an important thing in your. Now, so this time, the examiner asks you, there is in your one questions in your handout, usually in your exam paper, usually asks whether to compare the strategy planning with succession planning. Or sometimes the examiner asks from you to compare strategic planning with murder plan. Now this time your exam asks to compare business continuity plan with CFP. What is CFP stand for? Contingency funding plan. I think you may learn this one under your liquidity management, under your risk management, liquidity risk management. Definitely you need to learn what is CFP. So that is contingency funding plan. Now this year's question is given, compare and contrast, compare CFP versus BCP. So now you know what is BCP. So what are the things you learn under my area? What is BCP? You can say BCP. Now if you say BCP, you have to put the full name. Business Continuity Plan, as I explained to you in your note, it is a comprehensive written plan of action that sets out the procedure and system that necessary to continue or restore the operation of an organization in the event of a disaster. But I specified again this year also. They may ask from at your exam discuss about the significance of BCP under the strategic circumstances like COVID-19. It's a very fun, very good question to be asked during your exam. The importance of BCP under COVID-19 situation. So it tells you what to do, what is your plan, how you're going to serve your customer. Branch is closed, bank needs. So what is your BCP under such circumstances? Very good example, right? So therefore, so BCP in that case involves defining and any and all risks that can affect the company's operation or your bank's operation, making an important part of the organizational risk management strategy. So remember that the BCP play an important role in your risk management strategy, right? One of the important things is your BCP. And also, the BCP helps you to, and it can be a natural disaster like fire, flood, like COVID, some epidemic situation or pandemic situation, maybe due to some cyber attacks, right? and it facilitates how quickly you bring your business normalcy, and by reducing losses, right? And BCP also, remember, need to be tested periodically. Now remember, that's the important thing. Business continuity plan need to be tested periodically and review and take appropriate action if modification, if anything, you require. Right? That is BCP. That's the thing you need to write about BCP for your benefit. For your benefit. So, what is contingency funding plan? You know what is this? Comes under liquidity management. So, what is contingency funding plan? But basically, the CFP addresses alternative funding sources. To utilize when a financial institution is facing some difficulties in meeting financial obligation. So you must have a contingency funding alternatives, right? Sources. Actually, this is basically it's an functions of a treasury management. Usually, it's a treasury management division function. So BCP is basically maybe in the operation, but it's it is a responsibility of the senior management, right? So both are important plans. Now, what CFP, it helps to ensure that a bank can prudently and efficiently manage the routing and extraordinary fluctuations of liquidity, right? So that shows if you have a better CFP, that means you are prudently and efficiently manage routing and extraordinary fluctuations about your liquidity. And also it facilitates to mitigate your liquidity risk, as it describes the procedures that banks or financial institutions has implement to find out cash flow shortfall that occur due to some stress or some liquidity crisis, right? So therefore, remember, CF is that, and you know the BCP, right? So with this small note, I'll come to end of my session. So if I summarize what we have learned, we learn they have not put right. We have learned about strategic management this 5-day. I gave you a question paper. So are you with that paper with you? I send you a model question paper with regard to the questions. So whatever the questions can come from my section, I send you a question paper. Are you having with you? It's not put it here. Are you having with the question paper? Gihani, you having the question paper with you? It's right. Can anyone respond to me, please? Right? Are you having that 2021 May June model paper? Can anybody respond to me, please? At least put a chat. Can anyone put me? Yes, right. Okay. So then you will go through that one quickly as possible. Right? Take the first one. Okay, we try to answer. Now this paper, basically, I don't know why, basically for my area, right? So which the area I'm going to cover with you. Right. Then the first one, We call answer the following multiple choice and direct short questions appropriately. The correct choice is underlined. Now, what is financial conglomerate? That is, in fact, this is your 2014 September question paper. 2000, the first question, if you want, just put down 2014 question paper in your exam, right? The first exam. So what may be the correct answer? As I explained to you, the financial conglomerate is a basically, but it is a financial institution engaged in banking, insurance, and securities business. So that means conglomerate, I explained to you, there may be more than two or three, more than two services offered by an organization is called financial conglomerate. Or sometimes another name for that is called supermarket, financial supermarket. Now the question number 2, can anybody give me an answer? That question came on 2015 September and 2018 March. So the second question came twice in your exam paper. One is in 2015 September as well as 2018 March. Twice this question came. A financial conglomerate is a bank, B, an insurance company, A, a securities firm, D, none of the above. Now you see the very first question, the financial conglomerate is a financial institution. So involving in more than 2-3 businesses. One is banking, insurance. So therefore, financial conglomerate cannot be performed only by a bank, as well as it cannot only performed by the insurance, and also cannot perform only by the securities. So any organization is perform more than these 3 activities, we call financial conglomerate. So therefore, the answer should be for question number 2 is none of the above. Why? Because it has to be perform or provide services more than 3. So therefore, the question number 2 answer is none of the above. Then we move into the third question. The third question is, in fact, is your 2016 September question, right? Can anybody can give me answer for this, right? A company expansion possible through. So I think you, even though you not know the answer, you can easily select the answer. Can anybody tell me, at least put me a chat saying that what's the answer for 3, question number 3? A company expansion is possible through acquisition, merger, group, any of above. What may be the correct answer? You know, if you know the merging, if you know the acquisition, so then what may be the correct answer? Even though you don't know group, you know merging and acquisitions are 2 types of expansion methods, right? Therefore, answer should be group, right? Sorry, answer should be any of the above, D. Now, group also possible expansion. Now, I'll tell you an example for group. Now, you see when you look at the bank annual statement they publish, they say bank statement, bank figures, as well as the group figures. So that means business expand, like Sampat Bank with Siapata Finance, right? HNB with HNB Finance, right? Commercial with commercial finance, right? So there are a lot of organizations. So group also can be used as an expansion strategy. So therefore, answer is for the 3 is D, any of the above. Right. Now the question number 4 is in your 2019 September paper. Right, 2019. So you think you're on way. What may be the correct answer? I just give you 1 minute I'm right. You are not responding, no, Uta. So I give you 1 minute to see what I am not going to ask. So to yourself to see the correct answer. Then I will give the answer. Read, and suppose the question came to you. So you judge your own, right? You judge yourself, right? What may be the correct answer? Then I will tell you the answer. Then you see whether you have put the correct answer. And I'll keep on telling you all. Remember, if you can answer more questions, to you, the first question, you earn easily more than 14. So definitely you will pass the exam. So therefore, don't miss answering right answers to question number 1. Definitely you can earn 14 and more answers. Right. So what may be the correct answer? Right? Can anybody tell me? I know you are very much silent. That's the major disadvantages of online lecturing. Right? But in your front of me, at least you tell something. No. Now, even though you're not seeing me, I can't see you. You won't give me the answer. Right. So what may be the correct answer? Which one of the following provides the answer for question on where does the organization aspire to be in the future? What is the answer? What is the statement talk about? It give you directions to your organization to go. It's like I told you, it's like a lighthouse. So therefore, the answer should be vision statement. So easily you can earn some marks. Third question, next question. The granting of permission by one company to another company to use a specific form of its intellectual property under clearly defined condition. Now, you may have two answers for this, but what will be the correct versions? Now, intellectual property mean, what do you mean by intellectual property? Intellectual property means we usually call them as the patent rights for use their logo, use their brand name, use their the manner in which they serve, right? So all things comes under intellectual property. But maybe the correct one out of all when you talk about the most closest one is the licensing and franchising. Right? Out of the two, what may be the most closest answer? Right? Now, say intellectual property mean not only selling your brand name, the manner which you are servicing. I told you the franchising is a hybrid form. Not only you are just selling the brand name, not like you are giving the Coca-Cola brand name, but also you are watching McDonald's, are you watching how you service us. So therefore, most appropriate answer, more close answer for this is a franchising, not licensing, right? Obi, the next question. So what may be the next question? I think we today we discussed, and this question came maybe 2000 some, I can't remember the date, but it came on maybe 2017 or 18. Leverage finance. What do you mean by the leverage finance mean? So your funding a company or a business unit with one more debt than would be considered normal for that company or industry. So that is what you call leverage finance. You are having more debts for your sources, funding sources. We call them as leverage finance. So answer is A. Right. Now go back to question number 7. A special strength that gives an organization a competitive advantage. Why one organization is different from another organization? Why your bank is different to another bank, right? What is the reasons why certain organizations differ from another organization? Because of what? Because of none other than it is your core competencies. So that is how you differ from your organization with another organization. So what do you mean by your competency? Competency means your employees' knowledge about your products, knowledge about your industry, knowledge about your competitors and things like that. And then also your attitude, you have a positive attitude, your attributes, right? Your technical skills all comes as competency, right? If you have a more competency in certain area, definitely you have a competitive advantages over others. So therefore, the answer should be A, core competence. Okay, now the question number 8 is your 2016 March question paper. 2016 March. The leverage ratio is a measure of what? Capital level, borrowing level, intermediation level, all of the above. So we discussed what is leverage of finance. So if you know a little bit of, you don't worry about C. Even though you C is not known, based on A and B you can answer. Why? Leverage mean what is your capital and borrowing level. So therefore answer should be all of the above, right? Remember the leverage ratio where your capital and the borrowing level. Right. So what may be the answer for question number 9? Right? It's a model question which I prepared for you. What is the incorrect statement with regard to KPI? You know what is KPI? Key Performance Indicator. Now look at it, the incorrect statement. Incorrect statement. So KPI first one. Okay, I will give you 1 minute for you to think. Right? I will give you 1 minute for you to think the correct answer. Take 1 minute and or 2 minutes, even doesn't matter. So you try to see the answer. What is the incorrect statement with regard to KPI? Take 2 minutes, and if you're willing, at least send me a message, or otherwise think you are what the answer you are going to put. Now I want to have a message for you. So I'm supposed to take next week class to continue with this question and answer, to discuss this entire question paper. But to next Saturday I won't be here. So if you're willing, I can take, because then after next Saturday, I think this is our deputy governor, which is either Dr. Sridharan or Mrs. Vivek Fernando will take. Then I have a second as a special day. I can continue this class as a last, because next week I won't be here. If you're willing, I can have a class on I can Okay, I can start. I mean, continue with the balance question paper. On 2nd April, we have a special holiday. Most probably, maybe either 8:30 or 9:30, or maybe sorry, 8:30, 10:30, or 10:30, 12:30, as it is. Right, I will let you know. The IBSL will inform you next week on that. Right, people who are willing to join can join. Otherwise, you think no necessary, so I can anyhow. Our people, I mean IBSL, will communicate to you whether we are having on 2nd continuations of this question paper or not, right? Okay, so having discussed question number 9 now. Question number 9. What is the incorrect statement with regard to KPI? First, look at the first. Look, incorrect statement, right? KPI may often reflect relevant industry standards or benchmark. It is correct or wrong? Yeah, it is correct. No, so KPI always reflect relevant industry. Now, when you have the key performance indicators, we measure with other banks, the same industry. What is the industry average, like that? Okay, so therefore A is correct. B, different organization will have a different performance indicators depending on their specific performance criteria or priorities. That also correct. You are well aware that. So depend on the organization type, the different KPIs are developed, right? And then third one. So then the questions come from COD. Questions comes with the COD, which is the incorrect statement, right? A key performance indicator is a qualitative and quantitative measure to assess how well its results meet strategic objectives. Okay, now you have to think with this with the D. KPI can be a numeric number or a ratio. Now we learn under for key performance indicators. So usually the key performance indicators are preferably I don't have the question paper. I have email, so it is there, Buddha. It is there in the maybe email to you all last week. Yeah, last 2 weeks back or last week. I think Institute had sent. Whether Gihani you are having? I some Gilhan or Gihani. Gihani said they are having. Yes, Santi, no, Hettiarachi. Miss, you need to see. Institute has already emailed, not today, maybe 2 weeks back, right? I don't have to. Here is not here to put it, right? It is available. I think they have email. Then Gihani, if you can share with Yasanti, if possible, the question paper is ideal. Okay, I will try. Okay, I think Gihani can check, send, share with Yasanti's idea, right? Okay, so then what may be the correct answer? I told you the key performance indicators usually are on quantitative measure. Why? Because it is easy to measure, easy to compare. So therefore, KPI can be a numeric number or ratio. So that means it's an quantitative. So incorrect statement with regard to 4 A, B, C, D, answer should be C. Usually it is not qualitative, it's quantitative. That doesn't mean this cannot be qualitative, but with these four answers, the ideal answer should be C. Right. So then, question number 10, we're going to discuss the question number 10. So what is vertical integration? Now, we discussed the business expansion strategy. We discussed different type of expansion strategies. Now, you need to recall what are the business expansion strategies we learned. We learned first one as the intensive growth strategies, where market penetration, market development, and product. Right, and then we discuss the next one is integrative growth strategies, where we discuss vertical integrations and horizontal integration. And then we discuss horizontal integration, vertical integrations into two. What? Backward integrations and forward integration. So then we discuss the backward mean when you take over the control of supplier is called backward integration. Forward integration mean if you take over the control of your distributor, it's called forward integration. So the vertical integration mean therefore both, if you have the control over both both supply and the distribution, we call vertical integration. Horizontal integration means when you're going to take over the control of your competitor. So that is what we call horizontal integration, right? And we also discuss sometime conglomerate diversification and synergistic diversification, right? So the next level, related diversifications and unrelated diversification. Now, in this, with this that mind, so what is more appropriate for vertical integration mean is the B, that is, right, the merging of companies, those are in the same distribution chain of a product. We can say it's a vertical type of integration, right? So the question number 11, actually it is an possible question, can come in your 2021 May-June exam, right? A possible question. Name two banks recently implement merging and acquisition in Sri Lanka. Can anybody tell me what are the two banks in Sri Lanka? Name two banks recently implement merging and acquisition in Sri Lanka, right? So when you put like this, you have to say the two, if you can put like this, two main banks as well as what bank, but taken over by what, right? Now as you say, what is the answer for that? The Regional Development Bank take over Lankaputra Development Bank, and National Savings Bank and take over the Sri Lanka Savings Bank, right? So these are the two banks recently implement merging and acquisition in Sri Lanka. So then we discuss about the factors that drive organization to consider merging and acquisition. Of course, those are very straightforward things. I don't want to explain all these for improve your market share or to get the synergistic impact, right? So then we move into question number 13. That is in fact your 2018 and September 2017 and 18. The examiner asked you the same question. What is financial conglomerate? Now you know the answer for that. So an organization, a financial institution engaged in banking, insurance, and stockbroking activities, we call them as what? financial conglomerate. You see, the same question asked over and over again, right? Then, then the examiner asked from you in 2017 March, what is vertical integrations in relation to the company's expansion? That questions came on 2017. What is vertical integration? So you can say when a company is purchased by another, when an organization basically have a control over distributions as well as the uh, supplier, we call it's a vertical integration. Then question number 15, that questions came on 2017 March. What is meant by leverage buyout? So you know is simply, we discussed a little while ago, what is leverage buyout mean? When a company is purchased by another, when a company is purchased by another with a significant amount of borrowed money, we call them as leverage buyout. So I told you how to remember that. What do you mean by a leverage buyout mean? So you are conducting you're going to take, you have a wedding, you're going to marry, and you have a big party, right? Grand wedding, but you borrow money from another party and you have that wedding like a leverage buyout, right? So it is not the correct one, but I to remember for you, when a company is purchased by another with a significant amount of borrowed money, we call a leverage buyout, right? And how we differ from management buyout? I told you how we differ from management buyout. So here, when a company is purchased by another with a significant amount of internal capital, that means using the manager's funds, we call management buyout, right? Okay. So the next one, the question number 16. What is the criterion used to identify a subsidiary? So that also you can think about our Fort East terminal like that. So they say talk about certain percentage. Now, what do you mean by a subsidiary? Is a company with voting shares, company with voting share that is more than 50% controlled by another company, usually referred to as the parent company. We call them as a subsidiary. Right now, clear what you mean by a subsidiary? Right, more than 51% is called subsidiary. Right, then what do you mean by a next one? Subsidiary. Okay, what is meant by a business process outsourcing? Right, what is meant by a business process outsourcing? What is meant by business process outsourcing? That questions appeared in your exam in 2015 September. 2015 September. What do you mean by outsourcing? So actually it is a strategic use of outside specialized and efficient service provider or parties to perform a job or activity which are traditionally performed or handled by internal staff or resources. The activity or the function traditionally handled by your internal people, right, was had given to handle more specified, more capable or outside specialized company or people, we call a strategy outsourcing. There are some advantages and disadvantages of outsourcing. What are the advantages? You have the operational efficiency, you can reduce your cost, and you can concentrate more on more strategic business point rather than a small day-to-day activities sometimes. And there are some danger of reputation of confidentiality issues as well as the employee social unrest. And according to the central bank direction, you cannot outsource everything. Certain thing you cannot outsource, but other thing you cannot outsource. The strategic planning, risk management, compliance, internal audit, not not branch audit, right? Internal audit, foreign exchange, certain things you cannot outsource, right? But certain activities you can outsource, right? Outsource you can be used as a strategy. Next question: what does the organization chart of a financial institution show? Now, financial institutions show chart. Chart mean your organizational chart. Every organization having a chart. Now, it tells you what one thing is. It's talk about the reporting line. To whom you are going to report. It's talk about reporting line. And it's also talking about the operational levels. We have a business level, we discuss under strategy, right? Remember? So we have a corporate level, then middle level and first level, right? So we can understand about the business reporting lines and operational level, and also they talk about business levels, right? What are the businesses area, marketing, HR, like that. Okay, as well as the delegations of operations. Those are the your organization chart show. Then name 3 disadvantages of periodic SWOT analysis. I don't want to talk on that, but what are the disadvantages of SWOT analysis, as well as it's a simplicity, but the other disadvantage does not prioritize the issues. It does not privatize the issues, and simple. And if you want to further study, you need further depth analysis, further research you need. It is given you a snapshot. It's like a balance sheet of the financial statement. I told you the SWOT analysis, right? It's give you a small snapshot. What is my organization present situation? Right. Then what is the next question? What is the strategic intent of financial supermarket model or financial conglomerate? Why we go for that? I explained to you earlier also today very categorically what is the importance of having supermarkets or conglomerate. First one, if you have more than one business, so what you having? You're having a synergistic impact or synergies, right? Second one, you can do cross-selling. You can sell yet another financial product to your existing customer. Is called the cross-selling, right? So what are the strategic intents of financial conglomerate? One is synergistic impact or synergies, right? And the second one is cross-selling. Cross-selling means you are selling yet another financial product to your existing customer. Right. Next question. List 3 reasons for business expansion. So why we need for, what is the reason for we need to expand your business? As I explained to you, important thing is what the reason for large, improve your market share, you improve your profits. So you are going to diversify your risks and to earn economic scale. Then you can save for personal fulfillment, right? There are so many reasons, right? Can go for uh, diversity, that for the business expansion. Those are the reasons for business expansion. Then the next question, um, what is the main objective of introduction leverage ratio to the bank? Right. What is the main objective of introducing leverage ratio to the bank? What is maybe the correct answer for that? One is to ensure that so bank maintain adequate covering capital adequacy ratio, as well as bank go on bankrupt. That is why bank leverage ratio is introduced. So then we discuss what is today we discuss what is BCP. I don't want to explain again. It's a written plan action that set out the procedure and system that necessary to continue the operation and event of any disaster. So that is PCP. So name four broad aspects of strategic management or planning. What are the four broad aspects of strategic planning? I express you. It should be an interdisciplinary. That means you cannot confine to one division. So the strategic plan developed for the entire organization. So therefore, you need to have a better correlation, so coordination between interdisciplinary, interdepartment. That is why we call interdisciplinary. Next one is another broad aspect. When your preparations of your strategic plan, I told you you need to focus on external focus. What is happening in the external environment? For that, we discuss. We need to analyze our external environmental factors, that is special factors. What is the political situation? What is the economic situation, right? And things like that. That is why we call and Michael Porter analysis. We used to analyze our competitors. Then the external focus. And not only external focus, we need to look at it, our internal focus. So our internal strengths and weaknesses. For that, we discuss soft analysis to some extent, resource analysis. So what are the area we are good at? What are the area we are bad at? And things like that. That is what you call internal forces. And the four broad aspect of strategic management. Always we may think future. So future direction. Where my organizations going to be in the next 3 years' time? What is my vision, mission, corporate goals, objective, visions, values, all that comes under futuristic aspects of future direction. So therefore, so name four broad aspect of strategic planning, and mind you, in here you get 2 marks. You don't want to explain in detail, but you can put all these activities, that is interdisciplinary, external focus, internal focus, and future directions. Any plan like that. Okay, next, the last one of question number 25, we call main component of mission statements. Main components of missions and mission statement. You know, the main component of missions statement we discussed in detail: customer, your market, your technology, then what else? then your self-respect, then your product and services, right? All are we call component of a mission. Vision, of course, the main component mean they should be futuristic, right? It has to be inspire and aspiration, right? And okay, so these are the main vision. And main functions of objectives, even though it is not there, we discuss under prime. So that is planning, responsibility, integrations, and evaluation, right? Motivation and evaluation. Right, now I have answered to the first question number 5, and look at the question number part B. There's a one question is coming, something like this, right? Strategy planning and succession planning, right? And you look at the second one, vision and mission, merging and acquisition, then horizontal integrations and vertical integration, SWOT analysis and pestle analysis, related and unrelated diversification, then contingency funding plan and business continuity plan. Now, this is which I gave you last time. For this time, so you noted that in that question, examiner asks you, examiner tested you, what is the difference between strategy planning and succession planning, then contingency funding plan and business continuity plan, and they talk about vision and mission statement. So 3 have already tested, but you may have SWOT and analysis and pestle analysis, horizontal integrations and vertical integration. Yeah, they asked that question this year also, right? The same question asked this time. So which I gave you last time also, the same thing to the student. So the 3 questions came, right? Okay, so what you need to do now, the balance 1, 2, 3, 4, 5, right? If you can answer with the short notes, I can cover next time. But then if you really look, I will take question number 1 to explain. I have already explained to you the difference between the difference between strategic contingency funding plan and business continuity plan. So I will try to explain to you what is the difference between strategic planning and succession planning. Now, these 2 plans are 3 plans I told you, are mandatory plans. What is strategy plan? So you know the strategy plan is you do a formulating a strategic plan, formulating business strategies, implementing them, evaluating them, impact based on the organization's goals and objectives. Right now, why we have a strategic plan? Strategic planning is there for formulating strategies, right? And to not only the formulating strategies, you need to implement them and you need to evaluate them. What purpose? So based on their organizational goals and objectives. That is simple strategic planning. Now remember, you don't want to have an exact examiner's answer. Strategic planning usually consists of 3 steps, right? You know, formulation, implementation, and evaluation. Why we do all these things? In order to achieve organizational objective. Right. Now, if a question comes like that, you always try to first define what is this plan. You get 2 marks for that, usually 2 marks. Right? What is strategy? Or 1 mark. Right? So whatever, you have to define what is strategic plan. Then what is succession planning? And is it gain and compulsory plan? So it is an effort to protect the organization capacity to perform key functions, sustain important relationship, and fulfill its commitment during a leadership transition. Suppose if your leadership transition is taking place, so you may have a right uh, methodology or plan to replace the that leadership transition. So it is an effort to protect the organization capacity to perform key functions, sustain important relationships, and fulfill its commitment during a leadership transition. So හදිසියෙන්වත් අමතකම කරනවා leadership position එකක් නැති වුණාම ඒක ඒ position එක පිරවීම සඳහා ලබ් කරනු ලබනෝ කරගෙන ඇති සැලැස්මට අපි කියනවා succession plan. I'll say tomorrow your GM is going, who's going to come next? So the bank have a very good strategic plan, right? So if it's going, this man is going to take. Now this process ensure, that means the succession plan process ensure that organizations continue to run smoothly even after most important people or new person retire. So ensure that business continuously happening. Right? That is the importance of succession plan. The process ensure that organization continues to run smoothly even after most important people leave or retire from the existing position. That's the important thing. Now, the succession plan can be prepared for short term, it can be prepared for middle term, and also it can be prepared for long term. Why? Maybe next year, who's going to retire? So you have a succession plan. Another 3 years' time, who is going to retire? Now you have a middle term plan. So another 10 years' time, who is going to, how we are going to replace? Then you know how many people are going in 10 years' time. So you have a list of people you can occupy. So therefore, succession plan is maybe short, medium to long term. Depending on the situation, your organization can prepare. 2 years' time, how many people we need to recruit, or how many people we need to promote. That is succession planning. Of course, strategic planning, if you're compared with the succession planning, it helps. Now, it helps to understand the current positions of the organization, right? And where such organization need to reach, as well as what organizations need to achieve. Right now, usually corporate management is prepared this strategic plan and usually prepared for 3 years. Succession plan is a continuous plan, right? You need to update that plan. So that's the difference between strategic plan and succession plan. Now, how to answer questions like that? Now, if you put strategic plan and succession plan, what you need to do, you need to basically define. You need to define. Then you'll say the benefits. What is the benefit of strategic plan for organization, and what is the benefit from succession plan? Or maybe if you have any issues of strategic planning, but expecting mostly the definitions as well as what are the benefits, or how it important to the, how it implement, or how it valuable for the organization, right? Remember, so that is strategic planning and succession plan. Now the issue comes, Now, it can ask rather than strategic plan means succession planning. They can combine what is the difference between strategic planning and uh, liquidity fund management. What is the difference between strategic and BCP plan, like that. Okay, so you can have an idea about all these four type of plans, right? So we have some more 10 minutes, 20 minutes. I will take for your benefit, beneficial. So I will go quickly the in your paper this time. So March, September 20 paper questions I'm going to discuss with you for first 10 questions, right? First 10 questions, right? Whatever the applicable, right? I will say that this question, the examiner asked from you. I'm going to take any questions in my area. Right? Okay. Now, one simple questions, right? Right. Two questions in my area you can answer. Okay. Now, this year's question. So you get 4 marks on my questions. I prefer somebody can give me an answer also, right? Please. Then first one is this year's paper in my area, right? Name easy answer. Name 2 licensed specialized bank in Sri Lanka. Name 2 licensed specialized bank in Sri Lanka. How many specialized bank in Sri Lanka? We have a 24 commercial banks and we have 6 specialized licensed banks, right? So what are these 6? You ask only 2. Then of course you know one definitely, National Savings Bank, then HDFC, or what you call Housing Development Finance Corporations Bank of Sri Lanka, HDFC. Then the next one is called Pradeshia Sanmardana Bank, so we call Regional Development Bank, or RDB. Then we have SDB, that is Sanasa Development Bank. Then you have Sri Lanka Savings Bank, right, as well as Stage Mortgage and Investment Bank. Now the government, going to amalgamate, and they are planning to come up with one development bank in Sri Lanka. Last budget, they are proposed in Sri Lanka to develop a development bank. What are the 3 banks comes under that? If the examiner asks from you, right? Can anybody tell me what are the 3 banks last budget speech they have proposed, and they have gazetted now? I think they're going to gazette it. There are 3 banks jointly merged and to come up with the development bank in Sri Lanka. What are the 3 banks? All are specialized banks, remember, right? Out of these banks, I told you, were 3 banks were, we think. What are the 3 banks? We call them as Pradeshia Sanmardana Bank, or RDB, as well as HDFC, as well as State Mortgage and Investment Bank, SMIB, are jointly they want to convert to a development bank. Okay, development bank. Right. Now, in the first question, in my area, last one. Question number 10. So you get 2 marks and another 2 marks here. Name the licensed finance company of which the license granted to carry on finance business was cancelled by the Monetary Board of the Central Bank of Sri Lanka in 2020. What is the correct answer? Name the licensed finance company of which the license granted to carry on business was cancelled by the Monetary Board of Central Bank of Sri Lanka 2020. Can anybody tell me what is the finance company?
The finance company?
The finance company. Good. Now the same question can come maybe this year, right? But they are under legal process to cancel. What is that finance company they are going to cancel? Still not cancel. Remember, it is suspended. But the central bank take legal actions for cancellation their license. Now, you know the central bank, you cannot cancel, right? So it has to go for legal procedure, right? So suppose what is the bank, what is the finance company, or what is the finance companies of which the license granted to carry on finance and business was under legal proceeding. I will change it a little bit. Right, ETI Finance and Swarnamahal Investments. Good. So likewise, they are still not cancer, right? Still not cancer, but they are request for legal action. Okay, right. Remember that they are still not cancer. The license cancel only the finance. Now I'll ask you again. Now it is not relevant to my area. I'll ask from you whether the deposit insurance scheme can be used for to pay compensation for customers, right? You know the can anybody tell me? Yeah, there are two instances you can pay. One is cancellations and prohibited. Both occasion can, but within the 6 months you need to pay. Now you know in the deposit insurance scheme there are some countries. What is the Sri Lankan situation? How much they pay? 600,000. But countries like I can remember Malaysia and what is the other countries played cricket in close to England. Recent joint. Anybody knows that country with the one part of England? No idea. Now they are having the latest cricket status. Okay, so Malaysia and not Netherlands, Ireland, right? Ireland, right? So you know those countries, they have 100% deposit coverage by the central bank under their deposit insurance schemes. But Sri Lanka only 600,000, right? Why these countries are paying 100? So that means your customer confidence is good, no? No? But here the customer confidence is only up to 600,000. One reason is, okay, I ask you, even though it is not my area, I ask you one simple question from you. See, okay. Are the central bank, I'll ask you a simple question. Do the central bank guarantee pay the deposit insurance promise 600,000 to customers? I'll ask a simple open question. Right now we have established deposit insurance and liquidity support scheme, no? Right now under this scheme, whether the Central Bank of Sri Lanka are guaranteed to pay customers the bank's default 600,000. මම කියන එක තේරෙනවද? ඒ කියන්නේ ශ්‍රී ලංකා මහ බැංකුව මොකක් හරි මූල්‍යායතනයක් කඩා වැටුනොත් ඒ ලක්ෂ 6ක් ගෙවීමට බැඳී සිටිනවද නැද්ද? Yes or no?
Yes, under safety net mechanism.
No, that is the case. No, right? Okay, I'll tell you. Yes, up to now is yes, but there won't be any guarantee. Now the law saying the deposit insurance scheme will, under that the central bank will pay 600,000 provided that the fund is having adequate funds. Now you think about all the financial institutions collapse Sri Lanka. So maybe the central bank, the fund, what is the fund? What is the fund we call to pay 600,000? How you call that fund? What is the name of the fund? Full name of the fund? Are you aware of that? Deposit Insurance and Liquidity Support Scheme. Why they call Liquidity Support Scheme? Who manage the Deposit Insurance Scheme in Central Bank? What division? Suppose the examiner asks you, what department of the Central Bank manage liquidity, deposit insurance and liquidity support scheme? Which
Financial Intelligence Unit?
No, not that. Settlement and Reinforcement Department of Central Bank of Sri Lanka, right? That's a newly established department. Okay, so these are the things you need to learn, right? And they may ask question on this. And what the deposit insurance scheme is categorically saying that, right? So this 600,000 is paid based on the fund. What is the fund? The liquid deposit insurance fund. If we have money only, we can pay, right? How the money is coming to the fund? Fund එකට සල්ලි එන්නේ කොහෙන්ද? You know, it is initiated by central bank by putting 1.1 billion. Now it comes to around 60 odd billions. Their base is now 60 odd billion, right? Okay, how the money develop? Actually, this was started when we started the deposit insurance scheme. Only compensation given 100,000, and then it increased to 200,000, and then it is increased to 300,000, and then it's increased to present 600,000. Because why? The fund increase only they can give. So from where you get the funds? From the premium paid by the member financial institution. So how you calculate the premium? By the member institution. So they work it out from their deposits and certain percentage, right? What is the percentage? 0.1 to 0. Right. So you need to know all these things, right? Okay. So remember, there won't be any guarantee. What central bank is telling, as far as if you have enough funds in the deposit insurance scheme, we will pay. Now all the banks and all the financial institutions collapse. Central bank has no money. It's not a guarantee, right? It is a cushion. But usually now around 60 billion, no. But it's okay, but it's not enough. Deposit base in Sri Lankan banks and financial institutions is something close to around 10 trillion. It's a huge amount, right? Big 2-3 banks collapse. Government has no money. I mean, the fund is not having the money to pay. Okay, I just give you a food for thought, right? Okay, so these are not in my area, but you try to answer. Okay, so how about you all now? I want to inform my IBSL people whether you are willing to come for next week's. I'm not coming, so I think Dr. Sridharan to Mrs. Vimal Fernando will join and continue for 3 weeks. But my date, the 2nd of April, is not a Saturday, some special holiday. So anyhow, I'll come in. I'm having a lecture for my singular students, so I can take your also. I have a 6 weeks now. Today is the 5th week. So I want to finish this question paper, right? And so once I finish this question paper, you don't want to study. The examiner can't ask questions more than other than this area, right? So we try to answer this question. So therefore, please try to ready with the answers. And the next Saturday, the lecturer will communicate it to you whether we are having on 2nd April specific class. I will tell you the time, right? Next Saturday, they will communicate to you. Clear? So then thereby I can cover my entire thing, my area, right? So only area is asking, writing the questions and answers. I hope you will understood and enjoying the last 5 weeks with me. I try to give you a maximum possible. Unfortunately, I don't know, not much students. Maybe they have, I saw the recorded version is around 200 to 300 students watching the recorded version. Okay, so I will communicate it to you on next Saturday. Anyhow, I'm not going to have the next Saturday. And then during that time, there may be a message can come from IBSN on the 2nd April. What time they're going to come? Anything? You are comfortable with on April 2nd? Or otherwise, we can not have the classes, whatever. I can end up my session. If you're interested only, I may continue with this question and answer on April 2nd.
Yes, sir.
Right. So then what time you prefer? 2 hours. April 2nd, not Saturday. Okay. I will leave you on next Saturday. We'll inform. Right. Okay. Right. So then see you on next month. Right. Probably the 2nd April.